All right, welcome back to this week's market preview. So quickly we'll dive into um, what to expect for the week. Last week was basically straightforward. We were expecting a sell, um, and somehow we still didn't get a sell, even though we didn't get an entry, even though we had others pushed to the downside. So August has really been kind of a frustrating month where we get so many things right, but we are not just getting our entries into the positions as we desire. Hopefully, this week gives us a setup that we can actually take trades off. So last week we had this close, right? This was our weekly range, right? And then we broke it. Well, let's broke it on Wednesday at the retracement, and then finally on Friday, which is what we actually after the close on Friday, we closed way outside the weekly range. So this is what we call an ATR bust. So whenever we have an ATR bust, it basically trumps every other thing we are looking at. So our volume trend is still bearish, swing short is bearish, fractal OF is bearish. But because of this ATR bust, we are going to be looking to buy the USD this week. All right, so our basic buyers, our main buyers for the week is that we want to buy the USD. And for us to do this, we go to our USD basket. A fractal low has already been created here. I won't be expecting price to push down below, take out this fractal low, and then give us reasons to go up. So that is as straightforward as it can be. However, I need to mention that by Thursday, if price has already pushed up a bit, by Thursday we'll start looking for the resumption of the normal bearish trend. All right, if price gives it to us. However, our primary trend for the week is we're expecting price to come take out this and then give us a reason to buy the USD. Now, whenever we have an ATR bust, it basically suspends our intraday models. So the intraday OF, we are not going to be looking at it. The intraday trade, we are not going to be looking at it whenever we have an ATR bust. So this week, we're basically looking to buy the USD throughout the week if it is offered. But on Thursday, we'll begin to look for the resumption of the normal trend. And when we are looking for that resumption, we're still not going to be taking intraday trades. We are not going to be looking for our weekly setup. So to get our weekly setups, we want to see a fractal high formed on the USD and then taken out. Remember, we are looking for that Thursday, Friday only. So between now and that time, we are basically looking to buy the USD. And even if the USD setup comes on Thursday, we'll still take it. Comes on Friday, we'll still take it. But from Thursday, Friday, we are free to also take trades that are in line with our original bias, which is bearish on the USD. So that's basically that for the week. It's very simple. We go to the news calendar. The news calendar for this week, when it comes to red folder events, is quite light. That's just put it that way. It is quite light. Um, for Tuesday and I think Wednesday, we don't really have much of red folder news when it comes to the countries we are really interested in. So for if we look through the data for Tuesday, no red folder news on the USD. We have a couple of yellow folder or medium events, GDP growth rates in the Eurozone, um, home pricing in USD, and all that. But however, I need to mention this. Last week, we were also light on news, but we saw the market really move a lot, especially as the market began to price in aggressive price cuts or rate cuts rather by the Federal Reserve. To be interesting to see especially what the job numbers offer up on Thursday. I think that we have consumer confidence on Wednesday from the Eurozone. That's a red folder event. I think that's the only red folder event of note on Wednesday. Then we have CPI from Germany, which on Thursday, which I think would move the market a little bit. But I think the main thing the market is going to be looking out for is to see what the jobless claims look like. So going forward, I think till even the end of the year, market participants are really going to be keeping an eye on the jobs because as far as inflation is concerned, the Fed can actually afford to be patient on cutting rates. But the main thing that is prompting them now to want to cut rates is the unemployment situation. During the revisions during last week, that came out on Wednesday, we saw that the numbers were revised down by about 800,000 jobs. So that means the US economy actually created 800,000 jobs less than was previously reported, which is quite a lot. So the Fed Chairman Powell mentioned on, I think that was on Thursday or Friday during the Jackson Hole event, that they do not welcome any further cooling in the labor market. So if we continue to see cooling in the labor market, unemployment rates rising, it's going to just mean that the Fed will probably have to cut rates faster than anticipated, and which will lead to USD declines. But if we see job situation beginning to get better, then the Fed Reserve can actually afford to be more patient in cutting rates, which will lead to a bit of strengthening in the USD. So those numbers are really going to be important going forward, or the job numbers. So we want to watch out for that. It might not have been so much of a market mover before, but I bet you it's going to be a market mover going forward. So you really want to put some attention on that. So that will be that for this week. Have a good trading week.